Good evening, ladies and gentlemen. I am Soumya, moderator for the conference call. Welcome to Avanti Feeds Limited Q3 and 9 months FY24 earnings conference call. We have with us today Mr. C. Ramachandra Rao, Joint Managing Director, Mr. A. Venkat Sanjeev, Executive Director, Mr. Alluri Nikhilesh, Executive Director of Avanti Frozen Foods Private Limited, Mrs. Shanti Lata, GM of Finance and Accounts, Ms. Lakshmi Sharma, Senior Manager, and Mr. DVS Satyanarayana, CFO of Avanti Frozen Foods Private Limited. As a reminder, all participants will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touch-tone telephone. Please note this conference is recorded. I would now like to hand over the floor to Mr. C. Ramachandra Rao, Joint Managing Director. Thank you, and over to you, sir.
Thank you, Soumya. Good evening, ladies and gentlemen. I am pleased to extend a warm welcome to all of you for this investors conference call to review the unaudited financial results for the Q3 FY24. Along with me here are Mr. A. Venkat Sanjeev, Executive Director, Avanti Feeds, and Mr. A. Nikhilesh, Executive Director, is joining through VC, and Mrs. Shanti Lata, GM Finance and Accounts, and Mr. DVS Satyanarayana, CFO of Avanti Frozen, and Lakshmi Sharma. To begin with, Mrs. Shanti Lata, GM Finance and Accounts, Avanti Feeds, will present highlights of the financial results of the Q3 FY24 and 9 months ended 31st December 2023 of Feed Division, and also consolidated financials of the company for the same period. Thereafter, Mr. DVS Satyanarayana will present the financial highlights of shrimp processing and exportation. After presentation by both of them, we will take up questions and answers. Okay. So, I request Shanti Lata to take over.
Thank you, sir. I will take you through the financial performance highlights of Feed Division. So, Q3 FY24 consolidated results. The comparative performance of Q3 FY24 with that of Q2 FY24 and Q3 FY23 have been given in the presentation already circulated. Gross income in Q3 FY24 is 1,287 crores as compared to 1,312 crores in the previous quarter Q2 FY24. A decrease of 25 crores, marginal decrease by 1.9%. Compared to Q3 FY23, gross income of 1,132 crores, there is an increase of 155 crores by 13.7%. The PBT is 116 crores in current quarter, that is Q3 FY24, as compared to 113 crores in Q2 FY24, an increase of 3 crores. And compared to Q3 FY23, PBT of 96 crores, there is an increase of 20 crores by 21%. So, comparison of performance for 9 months ended 31st December 23 with 31st December 2022. In 9 months FY24, the total income increased to 4,185 crores from 4,062 crores in 9 months FY23. The PBT increased to 386 crores from 287 crores in the corresponding period of the previous year. Almost a 99 crores increase, mainly due to increase in revenue and decrease in raw material cost and better overhead absorption. The consolidated results indicate net impact of several factors of both frozen and feeds, especially increase or decrease in income, expenditure and any other exceptional items. So now I will present to you the standalone financial results of Feed Division. Feed Division Q3 FY24. The gross income for the Q3 FY24 is 958 crores as compared to 1064 crores in the previous quarter, a decrease of 106 crores, mainly due to decrease in quantity of feed sales due to seasonal changes. The gross income of Q3 FY24 increased to 958 crores from 878 crores in the corresponding quarter, an increase by 80 crores representing 9% due to increase in sales quantity by 9,968 MT. The PBT for the Q3 FY24 is 76 crores as compared to 86 crores in Q2 FY24, a decrease of 10 crores mainly due to decrease in sales volume due to seasonal changes. The feed sales decreased to 1,16,318 metric tons from 1,27,864 metric tons in Q2 FY24. The PBT in Q3 FY24 has increased by 6 crores from 70 crores in Q3 FY23, representing 9%. As you know, the cost of raw material constitutes major share of cost of feed production, particularly three raw materials which are fish meal, soya bean meal and wheat flour. The average raw material cost in terms of percentage over feed sale price was 84.83% in Q3 FY24 as compared to 85.53% in Q2 FY24 and 83.6% in Q3 FY23. Increase or decrease in raw material consumption is mainly because of the prices. The prices stabilized in the current quarter when compared with Q2 FY24, but are on a higher side when compared with Q3 FY23. The average cost takes into consideration volatility of the major raw materials like fish meal, soya bean meal and wheat flour. Sometimes they increase and sometimes decrease during the respective quarters. The Q3 FY24 rates of fish meal, soya bean meal and wheat flour are 129 per kg, 53 per kg and 30 per kg respectively. The present market prices of fish meal is around 125 rupees per kg, soya bean meal is 52 per kg and wheat flour is around 30 per kg. The fish meal price continues to be on higher side due to export demand. The soya bean price has come down marginally due to arrival of fresh soya and is expected to remain stable at least in the next few months. So the average soya bean meal price has come down to about 52 per kg. In the case of wheat flour, the price has come down due to arrival of good crop in 2023, with the price being 30 per kg from 30 to 3 per kg in earlier 2023. To sum up, I would like to share with you that the prices of these raw materials along with the related products like fish oil, soya lecithin, etc. keep changing from time to time depending upon the seasonality, production, global trends, etc. which have direct impact on the raw material cost of the feed, which is beyond the control of the company. Comparison of performance for 9 months ended 31st December with 9 months period 31st December 2022. Standalone performance. In 9 months FY24, the total income of feed division increased to 3,373 crores from 3,229 crores in the previous year. The increase is due to increase in feed sales and other income. The PBT in 9 months FY24 increased to 288 crores from 200 crores in the corresponding period of the previous year, mainly due to increase in sales, other income and decrease in raw material costs and also better overhead absorption. The future outlook or the shrimp production and feed consumption in FY22 and company plans for FY24. So on the basis of estimated shrimp production in 2023, calendar year, the estimated feed consumption is about 10.5 to 11 lakh metric tons. The company's feed sales during the previous financial year is about 4,73,000 metric tons as compared to 5,25,000 tons we are expecting in FY24. The companies of shrimp feed in the calendar year 23 is about 5,13,000 metric tons, a decrease of 2% when compared with previous year. When the total Indian feed consumption is down by 15%, the company's revenue is down by only 2% when compared with that. The shrimp processing and export division. The company's Vanamai shrimp exports in terms of value declined in FY23 compared to FY22 by 8.11% from US $5,234 million to US $4,809 million. The country's overall export of frozen shrimps in quantitative terms for FY23 was 7,11,099 metric tons as compared to 7,28,123 metric tons in FY22, a decline of 17,024 MTs representing 2.34%. The company's exports during FY23 was about 12,497 metric tons as compared to 12,836 metric tons in FY22, a decrease by 339 metric tons. It is estimated that the exports during FY24 would be around 12,500 metric tons. Now, I would like to hand over to Mr. D.V.S. Satyanarayana to present highlights of Shrimp Processing and Export Division.
Thank you, Madam. Now, I would like to take you through the financial highlights of Shrimp Processing and Export Division. Q3 FY24 financial results. The gross income for Q3 FY24 is 329 crores as compared to 253 crores in Q2 FY24. An increase by 76 crores, which is representing 30%, mainly due to increase in sales quantity by 35%. The gross income in Q3 FY24 increased to 329 crores from 255 crores during Q3 FY23, an increase of 74 crores, representing 29% year-on-year growth. The sales volume during Q3 FY24 increased to 3,990 metric tons from 2,865 metric tons in Q3 FY23, an increase by 1,125 metric tons. The PBT before exceptional item for the Q3 FY24 is 40 crores as compared to 32 crores in Q2 FY24, increased by 8 crores. The PBT is increased mainly due to increase in sales quantity by 1,040 metric tons during Q3 FY24. The PBT in Q3 FY24 is 40 crores, increased from 30 crores in the corresponding quarter, that is Q3 FY23, as there is an increase in sales quantity by 1,125 metric tons. Comparison of performance for 9 months ended 31st December 2023 with 9 months ended 31st December 2022. The gross income for 9 months during FY24 was 820 crores as compared to 838 crores in the corresponding 9 months period of previous year, that is FY23. The decrease of 18 crores in the gross income during 9 months FY24 is mainly due to decrease in average sales price realization. The PBT in 9 months FY24 is 104 crores as compared to 98 crores in 9 months FY23. An increase in PBT by 6 crores is mainly due to decrease in ocean freight rates during the current period. Provision for recall expenses in the financial statements. The company has not made any additional provision for recall expenses in Q3 FY24 since full provision has been made in the financial statements till 31st December 2022 against the total claims received from the buyers. So the current status of product recall is as follows. Value of claims received and charged to P&L 35.62 crores. Amount of claims settled up to 31st March 2023 32.57 crores. Amount of claims settled during Q1 FY24, 2.06 crores. Balance claims provision in the books of accounts as at 31st December 2023 is 0.99 crore. As regards the product liability claims for bodily injury caused by consuming company's contaminated product under the recall, the surveyor has submitted the final survey report to insurance company and it is under review by insurance company. As per information provided by broking firm, the claim is settled in early March 24. Since the liability has been covered under the commercial general liability insurance policy, there is no need of provision and hence we have not made any provision in the financial statements. So here I will just update on the new shrimp processing plant. So new processing plant and cold storage unit in Krishnapuram, Kakinada district with a capacity of 7,000 metric tons per annum. Plant and machinery installations are completed. Commissioning will start from 2024. Trial production is underway and commercial production scheduled to commence from March 2024. As you are aware, the company has been selected under two incentive schemes of Government of India. So first one, sales-based incentives under Production-Linked Incentive Scheme, and second one, grant in aid under Operations Green Long-Term Intervention. Production-Linked Incentive Scheme, company is eligible for incentive of 6% on raw products and 10% for value-added products on incremental sales over a period of 6 years from 2021-22 to 26-27 financial years, subject to a maximum incentive of 79.44 crores with minimum CAGR of 5% in sales. The company has received an incentive of 6.85 crores pertaining to financial year 2020-22. Incentive claim application for the FY23 was filed in December 2023. Operation Green Scheme, approval from Government of India for grant in aid for the proposed investment in new shrimp processing plant at Krishnapuram is received in December 2022. Maximum grant in aid under the scheme is 10 crores. The first installment of grant in aid is due from the ministry. The company has submitted all the relevant documents in this regard. Now I request JMD sir for sharing future outlook of the industry.
Thank you, Satyanarayana. Having reviewed the financials of Q3 FY24 and comparison of 9 months performance ending 31st December 2023, I would like to share with you the present status and outlook for the year 2024 of this aquaculture industry. In line with global forecast of moderate recovery of fishery sector in 2024 over 2023, the stocking of seed for first crop of shrimp culture in India commenced during the second half of January 2024 with an increase of about 10 to 15% over the corresponding period of the previous year. As the shrimp farmers are confident of stable farm gate prices during this year, the same trend of increased stocking is expected during the rest of the first crop period. Considering the present trend, an increase of 10 to 15% over 2023 in feed consumption seems to be certain to increase to about 12.5 to 13 lakhs metric tons in the current year. Our company targets to achieve about 6 lakh metric tons feed sales in the year. The processing and export shrimp division is also expected to increase exports to about 15,000 metric tons during the current year, considering the commencement of commercial production by the new processing plant at Krishnapuram in Andhra Pradesh before 31st March 2024. The company is focusing on increasing the processing and export of value-added products during the current year. The company, while strengthening the exports to US and Canada markets, also exploring other markets like Japan and Korea, where the company is receiving very positive response from them. The Government of India has also been focusing and encouraging aquaculture sector by extending promotional schemes like PLI scheme, operational greens, etc., which the company is availing. It is heartening to know note that in budget for 2024-25 presented by the Honorable Finance Minister on 1st February 2024 announced Pradhan Mantri Matsya Sampada Yojana PMMSY is being stepped up to enhance aquaculture productivity from existing 3 to 5 ton per hectare, doubling the exports to 1 lakh crore and generate 55 lakhs employment opportunities, along with big infrastructural changes of establishing 5 integrated aqua parks. Further details of the scheme expected to be notified after the general elections while presenting the regular union budget. To conclude, the stakeholders of the industry look forward for a bright future for the aquaculture industry in 24 and thereafter, unless any unforeseen developments in climatic conditions or changes in the global market scenario impacts the industry. Coming to the diversification of companies' plans into pet food and pet care products. You may be aware that the company has incorporated a subsidiary company with the name Avanti Pet Care Private Limited as a special purpose vehicle for manufacture of pet food, mainly dogs and cats, and other pet care products for catering to the domestic market. The required technical know-how is being provided by Bluefalo Pet Care Company Limited, Thailand, a reputed pet food and pet care products manufacturer in Thailand. A memorandum of understanding, transfer of technical know-how agreement and joint venture agreements have been entered into with the joint venture partners. An agency has been appointed for undertaking market research and survey for demand and supply of pet food and pet care products to evaluate and decide on specific products in demand in India. Further details of the project will be reported to you in due course. The fish feed, as reported earlier, a senior executive has been appointed to survey and evaluate the demand and supply of fish feed of various species in India, with the objective to set up fish feed manufacturing facility by the company. Now the survey is in progress and the report is being expected in a couple of months. Frozen shrimps and fish domestic market. The company has made the strategic decision to venture into domestic market, a move that the management believes will enhance our business prospects and create new opportunities for value creation within the country. The company is in the process of structuring the marketing strategy by taking on senior marketing professionals, and it is expected that the sales in the domestic market may be grounded in a couple of months. I think with this, I conclude the introduction part, the brief, the future for the aquaculture industry, and now we will take up questions and answers from you. Thank you, ladies and gentlemen.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. Our first question comes from Guneet Singh from Counter Cyclical Investment PMS. Please go ahead, sir.
In terms of exports of seafood. So, can you share more light on that and how can we capitalize on this opportunity?
Yeah, Nikhilesh.
Hi, could you repeat your question?
So recently there have been reports of, some difficulty or problems that the seafood industry, seafood exports from Ecuador are facing. So, I want to hear your thoughts on that and how the company can capitalize on this, because in the recent past we've seen that Ecuador has taken up some market share of Indian exports to the US. So, how does the outlook look going forward and currently for us in the US market?
Thank you. So right now there is a lot of political and social instability in Ecuador. So that would be a short-term problem. for the country because simply like a lot of buyers can't even go to the country right now. Right? I know several of them who have cancelled their trips to Ecuador in light of the situation. So definitely there's some we might benefit out of in the short term. But long term, I feel in India is still a good in a good area for exports, mainly because we focus more on higher value products compared to Ecuador. Ecuador's population is about 17 to 18 million compared to 1.4 billion. So they're not able to process as much as India can in the value-added space. So that way it's healthy for us in the US market in the long term. I hope that answers the question.
Yeah, that does. So basically in the value-added segment, we have an edge. But I mean, in the non-value-added segment, is there a number that you can give in terms of the landed cost of, say, exports from Ecuador versus from India?
So Ecuador does very low value items, like the lowest that you can go to. It's like just the plain shrimp or the shrimp without the head. So they're much more competitive than us over there because they don't have any other overheads like like your grading, high-end grading machines or even like cookers, etc. So there's no landed cost as such, but I would say in those products, just to provide raw material, they would be about like 10% lower than what India can provide.
I may
also add to it that we, Avanti as such, doesn't focus on those products. They account to less than 5% of our total sales or even like 2% of our total sales. The product that Ecuador does, we don't overlap with them.
I may add to what Mr. Niklesh said that, see, we are focusing more on the value-added products, export of value-added products, which will have, as stated, will have an edge. And more and more, we want to go for value-added, and the new factory is equipped with advanced equipment to make value-added products. And that is the area where really the companies, the profitability or the volumes and with exactly the lies. So we are going on that. In that perspective, Ecuador may not be that big competitor for us on that.
All right,
Okay.
got it. I want to understand this in the perspective of, the shrimp feed consumption, because, if our exports of even low value exports to US, they lose in competition to Ecuador, then the shrimp feed consumption may also go down. So I was coming from that shade, but I got it. And I want to understand what percentage of our raw material costs, is wheat and wheat, fish, and soya. In terms of percentage.
Fish and soya percentage.
We can
totally it would be 85%, all three together.
And breakdown of individually?
Sorry?
In an individual breakdown of wheat, soya, and fish?
See, I can just add to what Mr. Venkat Sanjeev said. See, this is a formula depending upon the kind of feed we are making, whether it is a starter or grower or finisher. The combination changes between the raw materials like fish meal, soybean meal, and the wheat flour. Moreover, the pricing also will have an impact. So we make an adjustment in the overall the raw material composition of each variety of products. So it is very difficult and not to give possible to give the individual breakup of soybean meal, fish meal, and wheat flour. So I think it's overall we say that this is about 85% of the total 62. It depends upon the product. So it may range from 70 to 85%. It may range with these three products.
All right, sir, got it. And my last question would be, what is the outlook for FY25 in terms of top line and bottom line, and what kind of steady state margins are we looking at in FY25 considering the push by government and situation getting better?
See, now as I told in my earlier, presentation, that 2024 as such appears to be still a challenging year for the sector, aquaculture sector, but still, compared to 23, we expect that 24 would be a better year. So in the sense that there is a marginal increase in the exports as well as the feed consumption, culture itself by about 10 to 15%. So this is still a beginning of the season. So it started at the mid of January and it continues, and the first crop goes on till almost July, August, it goes on. So as we go forward, we expect that the production will go up. As a result, the consumption of feed also goes up, and of course exports also do go up. So for 24 it is fine, and 25, as you said, the impact of the government schemes, what we told you earlier, like Pradhan Mantri Matsya Sampada Yojana, etc. See, the governments have to come. We are going to have the general elections, and after that the new government comes and they formulate the procedures, where we stand, how we take advantage of this. The government schemes for increasing the aquaculture, the exports of this seafood. It all depends, because 24 year, once we cross with comfortably, which we expect that it will be on more or less on the 22 year. 23 had actually decreased the performance in 23, and we hope to get back to 22 level, and if possible even to cross that. That is what we are looking at this point of time. So as we go, maybe in time next quarter, we'll be able to give you the progress of the industry.
All right, sir. Got it. That's all from my side. Thank you. All the best.
Thank you.
Thank you. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. I request the participants to restrict with 1 question in the initial round and join back the queue for more questions. Our next question comes from Apurva Mitada from Purnata Investment Advisors. Please go ahead.
Yes, and thank you for giving me the opportunity. So, in quarter 3, I have seen that the EBITDA margins have not gone up, even though in this quarter the shrimp processing has been higher and there has been stable raw material prices. So, have we increased the discount that is given to the dealers, and could you just give a breakup of per ton what would be the discount this quarter and the last 2 quarters?
Yeah, I see. The discount structure, it depends upon the market and the dealers also. See, we start with the general discount to incremental discount to turnover discount, the different, the single fee discount. There are varieties of discounts which we give depending upon the performance of the dealer. Generally, the TOD is the standard one, which gives once the dealer achieves a slab in which he falls, that percentage is given. It may be 1.5%, 2.5%, like that. That is one discount that we give it. The second discount is the incremental discount, that we take the previous year's performance and we fix the current year's performance, and for increments we have a slab and we give as they achieve the incremental the volumes, we get a certain additional discount. The third one is the single fee discount. We give the single fee discount to such of the dealers who deal with our feed, Avanti Feed exclusively. For them we give 1% discount. Like that, a new area discount. Supposing the areas which were not there earlier, we are going to come for the first time, that is a one-time discount, we give it. Like that, the discounts vary from different dealers and different parts of the country and the performance of the dealer. So it is very difficult to say generalize the discount. say maybe the 7 to 8% in an average, we may give a discount for the total. So it ranges between 6% to 8%.
Okay. And just the first part of the question is why EBITDA margins have not gone up? Could you give an insight? Because shrimp processing revenue has gone up this quarter and raw material prices haven't fluctuated that much.
Yeah. See, I think the question has two parts. One is about the feed and one is about the processing and exports. Just to brief you about the feeds, we have been actually every our investors call, we are seeing that the raw material prices are continuously increasing. There has never been a case where we have the decrease in raw materials in spite of decrease in raw materials, in spite of the new crops, good crops, whatever it may be, it is not coming. One of the reasons could be because main like wheat, soya, there is MSP, minimum support price the government announces, and the government keeps announcing very often, particularly when the elections are around. Then they invariably announce support to the farmers. So that way the prices have not been coming down at all. So on the other hand, we cannot increase the price of the feed also, because too much increase in the feed price will discourage the farmer to undertake the shrimp culture. So that again is a very limited scope that we have to increase. We have to increase the price of the feed. So therefore, the feed prices, for profitability does not increase suddenly. It only keeps around, if we can do around 6 to 8%. If you can keep stable 6 to 8%, really the prices of raw material comes, it may go up to 9-10%. I think that is what we have been seeing for the past almost 5-6 years. That has been the trend of the feed. As far as the processing is concerned, I think Nikhilesh, can you explain please?
Hi. The processing, I think there's been a good recovery in the volume. But the EBITDA, as you said, is pretty much flat because of weaker market conditions in the US primarily, and I would say also the rest of the world also being primarily weak market conditions. We are, however, trying to push up the EBITDA margins this financial year towards because the shipment what we're sending now start going into the next financial year. So by adding more value-added categories, also trying to push up the price with our customers. Thank you. Okay. Could you also explain what has happened to the...
So sorry to interrupt you, Apurva sir. Could you please come back in the queue for further questions, sir?
Okay.
Thank you, sir. Our next question comes from Nitin Awasthi from Incred Equities. Please go ahead.
Hello, sir. My question was around the fish meal part. I just missed the figures exactly. I was a little confused when I heard it. What was the fish meal cost during the quarter and what is it currently? I believe you gave those figures in the opening statement. However, there was some mix-up, so I couldn't understand the correct prices.
Yeah, just hold on. The price.
The price in the quarter was 129 rupees. And right now it is around the same, 125 to 127. It is in the same range.
Okay.
See, the fish meal price, just to give explanation, the fish meal price keeps fluctuating depending upon the fish catches, and also to the export demand. See, as we are seeing for the last almost 3-4 years, there has been a big demand for Indian fish meal in countries like Taiwan, Thailand, the Indonesia, Korea, and all, they are importing fish meal from India because that is found to be cheaper than the fish meal imported from Chile and Peru. So the quality and all is good, but that is making a big difference for the fish meal, what it was earlier and now. So if there is not much of orders, export orders, the fish meal manufacturers are preferring to supply in the domestic market at a marginally lesser price. So it is ranging between 120, 130, between that. We expect that if the good the catches happen in the next year, maybe it will be around 115, 120. But as it stands today, it is only 125. I don't think in the near future it will come down unless we get good catches and there are no export orders.
Understood, sir. But just wanted to clarify one thing. As per my understanding, in the export market front for fish meal, prices seem to have crossed 150 rupees, which is probably all-time high which an Indian fish meal exporter was getting, because of the total collapse in Peru exports and demand even from China now having to be fulfilled from India. Do you see those circumstances actually playing about? Have you made forward contracts or anything of that sort, like quantities guaranteed at around 130 rupees, anything of that sort, or will be going to the market every month or so?
See, our SOP for purchase of fish meal is that we have vendors evaluated, and we have about 13 to 14 suppliers, but among them there are only 4 or 5 big suppliers, but all of them prefer export market because they are not only getting the dollar conversion advantage, and also they are getting duty drawback, on that they are getting RODTEP. So these are the incentives given by the government that makes that that very attractive for them than to supply. For India, on the other hand, in India we have to pay GST. So these are the disadvantages that we are having. Coming to answer your question regarding the forward contracts, this business doesn't have the practice of forward contract. It is because even to get, supposing we want to buy, say, 2,000 tons of fish meal at a time, it is very difficult to get it. They only give 500 tons or 200 tons like that. 1,000 tons and above, it's very difficult to book on the spot deal also. Even if you have forward contracts, none of them is prepared to take that kind of because no one knows how much catches they are going to get, what is going to be the export order. So they are all very shrewd businessmen, so they will not enter into any forward contract. That happens only when there is a big fluctuation, only they take some positions for forward contracts. But in this stage, it is not happening like that. They are getting advantage on export, so they would not like to take any forward contract commitments with the Indian buyers.
Understood, sir. Thank you.
Thank you, sir. Our next question comes from Pradeep Jain from Solidarity Investment Managers. Please go ahead, sir.
Hey, hi. Thanks for the opportunity. So my question is more on the long-term perspective. If you see, sometimes it's Ecuador, sometimes it's India in this shrimp industry who is leading the position, right? So how do you see India over next 10 years in this industry, and what is the fair growth rate you think that Indian shrimp industry can do over a decade?
Yeah. See, the 10 years seem to be a quite long period, Mr. Pradeep Jain. So what we can only see, at the most we can see for next couple of years. So beyond that, looking at the aquaculture sector today, because it is very difficult to predict for the next 10 years. So, let me tell you the components of this trade. One is that raw materials which are mostly on the dependent on nature, like soybean meal or wheat flour or the fish meal. All these products, they keep fluctuating. The prices are fluctuating. We cannot take any a decision or a planning for this in future. Number two, the export prices of the shrimps are also, it's very, very difficult to plan for more than a couple of years. But 2 years itself is very difficult in this industry to forecast. So in spite of all that, definitely we have a plan. As the government of India is also looking at a 1 lakh crore exports through aquaculture industry, and we do have our plans how we go about the feed, and the other thing is the feed consumption increases as the area of the culture increases, or by the more farmers take up this. They can take up only when there is a profitable culture, and again they should get a good farm grade price, and from again the exporter will do it only, he can buy at a higher price only if he gets a higher export price. So these are all the chain, that is the supply chain that is operating. So with all that, we expect if we can get a 5 to 10% growth in the next couple of years, we consider that it is a really good improvement. And we'll have to see, because so many raw materials are becoming scarce day by day. Year after year, we are finding it very difficult to get the raw material sources. So there is a need for a lot of R&D to take place. They find substitutes for raw materials, so that while keeping the composition, the protein contents, etc., of the quality of the feed intact, and reducing the cost of inputs. Similarly, the aquaculture also is becoming expensive. How we can do it? There are so many methods that we are thinking of doing the aquaculture, and the export process, like what we are discussing about value-added products, which gives the more benefit advantage for us. So overall, I would say that it would be around 2 years what it could be. That could be done. I think Nikhilesh, Venkatachandji, do you want to add anything to this?
Yeah, I just want to add to this. So talking about the food product, right, which is almost become like a staple item now. Will be stable, and as the disposable incomes increase, the affordability of this protein, which is considered a premium protein, will become higher. There's a lot of effort in the industry also to promote shrimp, pretty much like avocado or eggs, promote to eat it because of its health benefits, sustainability, etc. Countries like India are opening up to China is now the largest importer of shrimp in the world. As people can afford this more, the demand will increase. As for India compared to Ecuador or any other country, like you had said, it's a cycle, but India has been consistently producing a good amount of shrimp for the past 20-30 years. So there is no short-term disruption that can be seen. But even in the long term, like Mr. Rao said, 10 years is a long time. But on the macro side, the demand of the shrimp is growing slowly, and so it should be beneficial. Yeah, and Avanti as a whole. Thank you.
That I understand, sir. My question is more on what is the...
Pradeep sir, so sorry to interrupt you, sir. Could you please join back the queue for more questions, sir?
Sure.
Thank you so much, sir. Dear participants, I kindly request you to restrict with one question in the initial round and join back the queue for more questions. Our next question comes from Varun Arora from Safe Enterprise. Please go ahead, sir.
Hi, thanks for the opportunity. Yeah, I may be repeating the question, so sorry for that. My question is regarding the environment that you are seeing, with respect to passing of, the raw material prices. So if you could explain for both, the feed business and processed shrimps, how's the environment in terms of passing the raw material prices?
Yeah. Let me first explain the feed, then Mr. Niklesh will explain about the processing and export. The raw materials, as we said, like fish meal, soybean meal and wheat flour are the major raw materials that we consume for manufacture of the feed. See, the cost of production of these products and is increasing day by day. And the soybean meal again depends upon the natural the climatic conditions. 1 year you get a good crop where then you can see the prices not going much, but in the next year there will be either drought or no rains and all. Then there will be prices will shoot up because of the shortage in production. So it also depends on the soybean production in other countries, where if other countries it affects the production of soybean meal there. So then naturally the prices, if there is a shortage, the prices goes up. So this is one thing which makes these raw materials continuously going up. Coming to the production, naturally the raw material cost component is about 70 to 85%. So naturally the cost of production of feed also goes up invariably. The question that you made was whether it can be passed on to the farmer. So the farmer situation, we are in a position to see that the farmer also sustainable culture year after year. If we increase the price and it works out, it doesn't work out profitable to the farmer, farmer will not undertake shrimp culture. Rather, he would go to fish or any other product. They will not do this shrimp culture. So we have to keep in mind the cost of manufacturing, producing the shrimp also, so that he will make some margins while the farm gate prices are kept in a reasonably good rate, so that he makes profit out of this activity. So these are the reasons that we cannot straight away pass on the increase in the price of the feed to the farmer. Moreover, we have the government regulations in states like Andhra Pradesh, where it is in the interest of the farmers. The governments are also working. They say that they come on the feed manufacturers to reduce the price, because the farmers are not able to make any benefit out of this activity. So this is one area where the feed price cannot be 100% passed on to the farmer. Nevertheless, what we do is we take all aspects into consideration, and we make a moderate increase whenever there is a raw material price increase, and make some share is taken by the company and some is passed on to the farmer. As far as the processing is concerned, I think I'll request Niklesh to explain the operation of the processing unit.
So currently the price push or the price recovery of the increased expenses from the customers is very tough, because they're actually the industry is facing an oversupply situation, right? So right now it's very difficult, but usually, because all our contracts are not very long term, right? They're usually spot buys, or the maximum is few contracts we enter into long-term contracts. So usually, if not 1 year, the second year we're able to pass on the prices, because as the processor, we're just pretty much taking the farm gate prices, adding our overhead and giving it to the end customer. But right now, with the oversupply situation, it's a little bit difficult. But as things stabilize, it should be fairly easy.
So just to follow up on the processed shrimps, would you say that given the situation in Ecuador, you see better prospects than what you saw in last 12 months in terms of taking the, realization increase?
I would say yes in the short term, because I don't know, like the several reports of instability, harassment to the shrimp farmers, threats to the factories. So on the short term, definitely there is I wouldn't say advantage, but I think a preference towards buyers sourcing from more stable supply chains, just because it's easier for them to navigate with. In the short term, yes, but in the long term, we need to see. I mean, the hope is the country does stabilize fairly quickly, right?
Sure. Thanks a lot. Thank you.
Thank you, sir. That's the last question for the day. Now I hand over the floor to the management for closing comments.
Yeah, thank you, Soumya. Thank you, ladies and gentlemen, for sparing your valuable time for having discussion with that, the interesting questions, because every investor will have this kind of the questions that they would like to know about the industry. And one thing we can assure you from the management part of it, we take every effort to see that the operations are profitable and investors are benefited by this. At the same time, the most important thing is the reputation of the company is maintained, and in fact it should grow year on year. So that's what our objective is. I thank you for your participation in the conference call. Thank you.
Thank you so much, sir. Ladies and gentlemen, this concludes your conference for today. Thank you for your participation and for using Dur Sabha's conference call service. You may disconnect your lines now. Thank you and have a good day.